From one earnings to another, let's speak about Zenza Technologies. It's been a muted third quarter with revenue up by only 2% at 792 crores. To help us understand the earnings better and give us a vertical-wise dissection as well, joining us on the show is Managing Director and CEO of the company, Mr. Sandeep Kishore. Good morning, Mr. Kishore. Always good to have you on the show. Let's start off with your headline numbers. So, your dollar revenue, that's grown by around 1.3%. And if we talk about EBITDA, there's been a contraction of 0.7%, while the bottom line has shown a surge of 18%. Can you take us through what factors below the operating line have led to this bottom line boost, and what has led to the contraction in terms of the operating performance? If you can highlight also subcontracting charges, utilizations have dipped this time, as well as on-site effort and wage costs. What has led to the pressure on the operating line?
Good to be talking with you, Pranay. Yes, I think on a constant currency basis, we delivered quite well at 1.9% on a sequential basis and 1.3% on the dollar term, as you mentioned. The net profit, yes, has gone up actually quite well, 17.1% on sequential and about 10.9% on year-on-year. You would also notice that in the operating level at gross margin, for the second consecutive quarter, we have increased the BPS. So we are now at 30% gross margin level. Previous quarter we had increased it by 60 basis points, and the Q3 we increased it again by 30 basis points. EBITDA declined marginally. There was some acquisition related cost. You would remember we did Foolproof acquisition in Q3. There was some cost related to that which impacted the OPEX. But on an apples to apples basis, I think we are executing quite well on the digital-led strategy, which we have been talking about, the whole return on digital. Utilization, which you mentioned, has marginally dipped to 79.5% from 80%, but that is on account of some of the hirings that we've done in anticipation of the projects which we have won. So the pipeline looks quite good. Last quarter, we did about $170 million worth of new order booking. So all in all, I think it's been a good quarter on the performance across the regions. You talked about the vertical sector. Retail and consumer for us is actually quite a large part of our business. It's over 25% of the business. Financial services is about 20%, which grew 9.7% sequentially on a constant currency basis. On retail and consumer, it was more or less flat because last quarter of the calendar year, a lot of projects actually come to an end, but we have won several new projects, so you will see uptake into all of these businesses as we go forward.
Which leads me to my next question, Mr. Kishore, and that's quite an outlier in terms of the jarring numbers. The repeat business performance, that's 74.8% versus 79.2%. This has progressively gone down. Is it a function of older orders getting exhausted and then renewals will happen? So this is why this is a one-off that you've taken this time around, because even the contribution from the top 5, 10 and 20 clients has clipped on a sequential basis.
Yeah, I think so. Let's take the second question first. On the top 5, 10 and 20 clients, the fair way to look at it is on an year-on-year basis. So on an year-on-year basis, on the LTM, all three of them have actually shown increase. The top 5 have gone up by about 2.5% as a percentage of our revenue, the top 10 by 2% and the top 20 by 3.6%. So there has been some adjustment in the sequential basis in the 5, 10 and 20 as you mentioned, but on an year-on-year basis actually it's executing quite well to the strategy that we have put into place. We now have dedicated teams for those accounts. We put digital evangelists into every single one of those accounts, and that's executing quite well. The repeat customer data that you picked up actually is more to do with the Foolproof acquisition that we did. So because of the acquisitions, those clients which came in new is now treated as net new customer, and that is why there's been a marginal shift in the net new customer which we have reported.
All right, but this number will go up. Is it to be understood that way?
So our execution strategy on net new account continues to be quite good. The whole return on digital framework is aligned to delivering digital transformation into the net new segment. So we would see a lot of our business actually coming from net new customers.
And very quickly, before we let you go, the number of active clients has gone up quite significantly. So is it to be understood that in a time when artificial intelligence and digital is gaining greater focus, the realizations per client will be lower, but you will focus on higher margins per client going ahead or per offering?
Yeah, I think it's a fair assumption. The number of clients has gone up because of the foolproof acquisition. We are executing well on the long tail accounts, which we had talked about earlier. So our focus is to work with clients which we can provide multiple services. So number of clients has spiked up because obviously we acquired Foolproof in the last quarter, and that customer has shown a big bump in that data which you called out.
Understood, Mr. Kishore. Thank you so much for patiently explaining to us the modalities of those numbers, why certain of them look anomalous, and what the outlook looks like for the company going ahead from here on. Good speaking with you. Let's move on now to Bharat Financial Inclusion's earnings numbers, and it's been quite a strong quarter as far as the numbers are concerned. Revenues are up 33%, profits have gone up almost 79%. To help us understand